Northern Miner Podcast, and I'm your host, Matthew Keevil, coming to you the week of September 12th. And I have some fun stuff this week. I'm excited. I teased it last week. I had a chance to sit down with Joe Mazumdar from Exploration Insights, and we have some really topical conversations on things like resource estimates and stuff like that. One of the major things we talk about is people may have seen the headline, Orezone Gold and their Bomboré deposit in Burkina Faso. Late last week, they revealed that they lost around 29% of their global resources due to a change in resource estimation methodology. So they brought in a new engineering firm, Roscoe Post Associates. They imposed some harder boundaries on the resource calculations and I shouldn't say lost, but just had to disclude a large amount of material from their mine plan, hypothetically. But anyways, Joe and I get into this in a great deal of detail. But we also talk about Pretium. We get into zinc. We talk a little bit about Nevsun, the Bisha mine. We talk about M&A activity and where Joe thinks that's going in the next few months heading into the new year. So it's some really exciting stuff. So it's you want to catch this one. It's especially if you're an active investor or anything in the mining business or work in the business. It's a good one to get caught up on trends and what's going on right now. So it's interesting stuff. We will run that shortly. For now, I will just run through our macro really quick here. Global equities are down this morning. We ran into a little bit of what should I say? Everything fell on Friday, and it's continued into Monday. It's a little bit of a rough patch, as they say, right? So what happened was just to open this morning, commodities are down just to start Monday here. Oil lost about 2.5%. And is at about $44.93 per barrel at the time of recording. Copper dropped about 0.9% to $2.07 a pound. And gold lost 0.5%. Once again, we just keep talking about how it's so range bound. It's pretty much traded between 1310 and 1350 here. This morning we're at $1,328 per ounce. The greenback's stronger against most major currencies. Obviously, that makes the loonie a bit weaker. We're trading at about 76 cents to the dollar, down about 0.5% this morning. And so in terms of macro, some of the things we're looking at, there's improving gold demand in China and India. We'll talk about that a little bit. The odds of the Fed increasing rates. Oh, gosh. I'm getting like rate malaise here. Like the odds of the Fed increasing rates at its September 20 to 21st meeting rose to 30% last Friday, according to analysts consensus. So that's according to the federal funds futures contracts. So we'll keep our eye on that. That's a date you might want to mark down, the Fed meeting at September 21st. So that's sort of where our macros is today. But without putting this off any longer, because I'm as excited as you guys are, let's get to Joe. Joe Mazumdar with Exploration Insights, and I'll see you guys on the flip side. And we are on location in downtown Vancouver. We're out of the office today, but we're very lucky because we're visiting with one of our most popular guests. The last segment we had was Joe Mazumdar from Exploration Insights, was maybe our most popular podcast segment ever. So Joe's back. Welcome again, Joe.
Thank you very much, sir.
And I'm excited because we were emailing back and forth, and I was like, Joe's like, what should we talk about? And one of the things Joe brought up was actually the Orezone Bomboré situation, which is pretty much making a lot of headlines, or has made a lot of headlines. The stock prices tanked. As people know, they lost about 30% of their global resources and reserves during an engineering company switch. So Joe brought that up. So without further ado, I want to get into this because your insight's going to be awesome. So let's get into what you guys found when you dug into the Orezone technical documents.
Okay, I guess first off, what I think what we got to say is in terms of this resource estimate, and it's the implications are a potential 30% on reserves, but we don't know that yet. Okay, yeah. We won't know until later. Yeah. And this week, and actually today is when Orezone or RPA is supposed to restate the resource, so we'll wait for that. So what we've been seeing over the past few years is a lot of changes in resource estimate because of bad geology. Okay. And we've seen, calculations due to inferring that the grade is more continuous than it is, aka Rubicon, geology, Cochinor, and potentially Eleanor. And then here, the issue appears to be, from what we saw, was there was a long section in one of the, or a cross section in one of the reports on the resource that showed what appeared to be blocks of ore that were outside the waste ore domain. So what it implied and what the press release basically alluded to was that SRK, who did the original resource back in, I think it was 2012 or 2013.
2013, yep.
That resource had a really, let's say, a weak boundary between low grade and waste.
So an envelope? Was it like
an envelope? Yeah, and so we saw low grade mineralization going into the waste, whereas RPA decided that they should stop it. And what's interesting to me is that we did the reserves based on that resource last year.
Yeah.
And the question to me is that, everyone's talking about SRK, the resource estimate being wrong. But then my question is, why didn't RPA do this last year when they did the reserve and say, you know what, I'm going to cut it off here.
Okay.
And I'm not going to take this resource because it's outside my ore waste domain.
Yeah. And just so to clarify for our listeners, one of the things Joe's referencing here is that Orezone shifted engineering suppliers. So they went from SRK Consulting to Roscoe Postle Associates, which is RPA, which is another supplier.
But RPA had done the reserves and the mine plan. So when they did the mine plan, they did the reserves. So RPA was already been in there. And so the issue was now, well, what do we do going forward? We're going to have to adjust the mine plan. We're going to have to adjust all this other stuff. So who do we use, SRK or RPA? And the decision was to be RPA because they're already doing the mine plan. They're going to do the reserve, so let's just let them do the resource.
Okay.
And so with the additional 50,000 plus meters of drilling that they've done since the 2013 resource, when they brought that in and when RPA introduced their hard boundary, Orezone management, and I have a lot of respect for the management team, had very little idea that the resource would change this much.
Yeah. And thus the disclosure when it happened.
Thus the disclosure that the implication was a 30% reduction in the resource, but they really don't know.
But as you pointed out, that's a good point. They don't know yet.
Yeah. But most of the analysts had obviously done the 30% reduction, and what we did was we applied a 30% reduction to a high-level model. We never owned Orezone, but recognizing that we thought about owning Orezone over the summer if it pulled back. It did pull back, but obviously for the wrong reason. But we ran the numbers. We lowered the resource. We took some of this low-grade material, made it waste, increased the strip ratio from 1.1 to 2 to 1.
Doubled it, eh?
Well, it basically, everything that was low-grade is now waste. You still have to remove it in our mine plan. If they change that, that's a positive. But basically, that's all we did.
Okay.
So to access that ore, you still have to go to the low grade.
Okay.
So the question is right now, what is this going to look like going forward? Mm-hmm. We're hoping it looks better. Obviously, so do the people that vested in at $1 in the last placement.
Yeah. Yeah, exactly. There was just a placement at $1.
Okay.
I think it was 20 some odd million.
Yeah, exactly.
Right before this happened.
On a positive side, for somebody who likes the management team, likes the optionality and the leverage this brings, you've got less ounces to lever yourself to, but what is good is that they're capitalized with respect to working capital to develop the story further and to take a different route. They're not up against the wall with respect to raising money.
And interestingly, this isn't exactly, it doesn't scream at you with grade, this deposit. It's not.
It never did.
It never has.
It never had. No. The big thing was optionality because they originally had a sulfide resource of around 1 gram.
Yeah.
But it was going to be obviously harder and needed a milling scenario and a lot more capital. And so they changed that to let's do a PEA and a scoping study on the oxide. Because we've already drilled it trying to get to the sulfide.
Exactly. Yeah.
So the whole idea to invest in Orezone was, hey, they've got a feasibility on the oxide. It makes sense at X gold price, and the gold price is getting there.
Yeah.
But hey, look at the sulfide. If the gold price goes up even further, hey, they've got this and we know a lot about it.
Bang, yeah.
But the problem was that the hit on the potential resource also has implications on the sulfide.
Yeah. Exactly. It's global. It's across global. The entire resource model.
Right? But right now, all we know is the potential implication on the oxide resource. We don't know what's going to happen with the sulfide resource, and we don't know what the implications are on the reserves.
Yeah.
But what they're stating in the press release is that, look out, it could have up to 30% implications on these other factors.
I remember, I think I was talking to Ron Little, who was the president and CEO at Orezone last year, And one of the things they were responding to was market pressure. They had that big mine plan where it was the capex was significant, like it was materially larger than the stage thing they're doing now. And I remember they released two different documents last year, and they did the one you referenced, the PEA, and then they had the feasibility level on the larger. And people started paying more attention to larger build as gold prices went up. So it'll be interesting to see how they respond with the new document.
I'm sure that a lot of people that are involved and got in the dollar placement were thinking that eventually the sulfide resource would get exploited.
Yeah.
Because we, apparently knew a lot about it.
Yeah.
But obviously the 30% reduction in the resource, impinges upon that dream.
Now we're all just waiting to see what it's going to look like you said at the onset, because we don't know. We have no idea, right? So, yeah, and Joe, one of the things, I'm here with Joe Mazumdar from Exploration Insights in Vancouver, BC. Joe, one of the things I wanted to maybe expand this discussion, you mentioned Rubicon. We know now Orezone can sort of be added to the list of, we've had sort of these situations where people are starting to question the viability of 43-101s, where they're, that regulators, who's monitoring these things, why are we seeing these ounces, or in Rubicon's case, an entire mine that was built get shelved all of a sudden. And Goldcorp, you mentioned with Kochner, downgrading it from a development project to an advanced stage exploration project again. So one of the things I wanted to get your input on is just sort of why is this happening, and B, in your experience having looked at these things, is there something wrong with the actual process of defining these resources and reserves? Or
I guess number one is that I think people are too caught up in the math and not enough in the art.
Okay.
And it's probably half and half art and math. It's how the grade influences, how far you take it out. Like I remember doing the Pretium numbers, and again, there's no, these guys aren't being nefarious in their numbers, Orezone or any of these people. The issue ends up being, okay, this is the resource estimate that we got, and the key word here is estimate, and saying this is what we're going to try and extract.
Yeah.
And then the problem or the issue becomes, hey, somebody else says that's not a viable method, it really should be this, but we're really not going to find out until it's actually mined and extracted and it's actually resolved in the plant. Yeah. And until then, we don't really know. And I've talked to a mineral resource estimator from a major consulting firm, and he says usually these resources can be plus or minus 20%.
Exactly.
And the issue that I have is that we can say, oh, this always happens to junior companies. Well, no, we've seen it in Goldcorp, and we probably see it a lot more in bigger companies, but they can hide it because they don't have to produce the 43-101 technical report that gets so much maligned.
Yeah.
And the other point is that people will say, oh, but that was a scoping study. Well, that's not an issue either, because obviously Orezone's was a feasibility study, Torex reduction was a feasibility study, Midway's reduction was a feasibility study, and Golden Queen's was a feasibility study.
Yeah, yeah.
So you can get that off the table as well.
And that's Torex Gold, just so everybody knows, the Morelos mine in Guerrero. So there's a few examples of this happening, especially as people get, like you said, you get down there. If you when you have a mine, everything's theoretical until you actually dig, right? So one of the ones you mentioned this internet is Pretium and the Valley of Kings, because that's maybe one of the most unique deposits going right now. Like it's so maybe just I mean, the thing is that the variability of the grade, the coefficient of variation, if you take the standard deviation of the grades that they use to calculate their resource over the average of the resource, that coefficient of variation blows everybody else out of the water. Yeah,
and it's just like that. If you ever go to the deposit, you can have a drill hole drilled 20 centimeters to the right and miss the big glob of gold.
Yeah.
And when they did a reconciliation of the bulk tonnage sample, which was interesting, I mean, they used a whole bunch of resource estimation methodologies. They did ordinary kriging, inverse distance squared, third to the fourth, with different cutoffs applied and not applied, versus the multiple indicator kriging method that the Australians used and Snowden uses, versus what Strathcona said was a bad estimate.
Yeah.
So what that came out with is it didn't really matter what estimate or methodology you use. Most of them could get close on the tons and the geology, but nobody could get close on the grade.
On the grade, yeah.
So it's really a roll of the dice in Pretium's case.
Yeah.
And hence probably
well,
a
the
lot
discount that they're trading at, right?
and the reticence of somebody on an M&A.
Yeah, exactly. Oh, for sure. Yeah. Well, I mean, that thing, assuming it
because you've got the jurisdiction, you've got the grade,
permits, everything,
you've got the permit, and you've got the grade profile that any major would want.
Well, as soon as if Pretium and Valley of Kings, if the grade reconciliation shows up where they say it's going to be, they'll be gone within probably 6 months.
The problem there, and what you said, it all depends, because the grade reconciliation or anything that we talk about depends on the time period you're talking about.
Yeah, fair enough.
If you talk about a month, the reconciliation can be very volatile.
Yeah.
Over the life of the mine, it might actually meet what the reserves say. But day to day, week to week, month to month, it may not.
So you're saying that for someone looking at it from an M&A point of view, you might just never have that information?
You might never.
Yeah.
You might never. And then you're going to have to take a punt on it.
Yeah, exactly.
But the thing is that what the reconciliation of the ounces show that it was actually higher. And then everybody said that there wasn't a problem. But the problem isn't that it was higher, was how much higher it was.
Yeah, exactly.
Because how much higher it can be is how much lower it could be.
And Joe, one of the interesting questions that sort of spins off this discussion is, as someone who digs into companies' technical reports, obviously does analysis. So when you're looking at stuff, I mean, does this sort of make you look at deposit types and avoid certain maybe geological belts where things are more nuggety, or how do you sort of?
Well, what we'd be interested in is what, like, our thesis is to get these exploration and advanced projects in places that people want to be mineable, not necessarily some place where you bring your wife and kids and your grandparents.
Yeah.
But some place where people are comfortable mining, and deposits that people are comfortable mining and extracting with processes that are well known. Once you get into an issue that, we're not sure if the grade actually exists, or we're not sure if we can actually extract it, we're not sure if the infrastructure is there, we're not sure if there's something that's ever going to be permitted, all those little red flags or fatal flaws are projects that we would avoid.
Yeah.
So a decent deposit in one jurisdiction, we take that same deposit and put it in a different jurisdiction, it might not work. Okay. And metallurgically, Carlin deposits work in the Carlin belt. They don't always work everywhere else.
Yeah, no, that's a good point. I mean, one of the things that you'd mentioned to me when we sat down in Dawson City in mid-July was that it was getting, in terms of, we'll stick with gold because it's kind of dominated the conversation thus far, it's getting a bit harder to find value now when you were looking at the multiples based on spot gold. And so, I mean, it hasn't really changed since we last spoke. I mean, it's been range bound within 1,300, and I think we're around 1,350 today. I mean, so now when you're out with Brent, you guys are talking, I mean, how are you sort of finding, those sort of diamonds in the rough, if you will, or those investments where you can see some value add?
So what we've done is if you've looked at the letters over the last, since December, since we've been moving up this quote unquote bull cycle, is we were buying like junior producers that we thought would get taken out, which thankfully did, like Claude and Lakeshore. And we're still hoping for Richmont. Yeah. And we've seen good things happen with Westone, which we don't own and we missed. And then we moved down and we had some development plays. And some of those thankfully got taken out, like Kamenak.
Yeah.
And some advanced plays like Reservoir.
Reservoir, yeah.
The link here is that we had quality and upside potential that people wanted. Yeah. And now we're moving down market to explorers. So, buying things like Colorado. I mean, we have Mariana, which is going to put out a new resource, the Hot Modern, very high grade thing in Turkey.
Project,
nice deposit.
Yeah.
So we're moving to those, and then also grassroots explorers like Colorado, good jurisdictions that have a fraction of the market cap of the companies next door, like your Seabridge and Pretiums.
Yeah, that's fair.
You know? Yeah. But also what we'll tend to do is get off of the North American exchange, where everything is run up.
Yeah.
And then do more Australian stuff. Okay. So, we did Cardinal Resources, and that's been a nice play that's picked up quite a bit since PDAC. It's got a project in Ghana.
ASX listed, or
It's ASX listed.
Yeah.
Or, or sometimes we go different commodities, and we got into Ivanhoe earlier this year. Was my top pick on BNN when we did the PDAC call with BNN in March.
And was it like 60 cents?
It was at 60 cents.
Yeah.
And now, and this is in a dead copper market in the DRC.
Yeah, they have zinc exposure too, right?
Yeah, but really what's driving that is the ridiculous copper grade and the new discovery of Kakula.
Yeah, we've done a lot of coverage on that. If anyone wants to check out Leslie's, our resident geologist in Northern Miner, has done a lot on that, and she loves it too. So
and so the thing is, what you want is this kind of grade, because this kind of grade, these kind of deposits will win at any part of the cycle, but what you want to try to get them is when nobody's talking about it.
Well, the funny thing is, and we kind of mentioned this off air, is one of the things that happened with Ivanhoe is you mentioned people, and you've got Robert Friedland going out to Bloomberg and being like, well, we had to hire a major bank because everybody's signing CAs at our property. And all of a sudden the stock goes up like 30%. And you're like, well, that's Friedland.
And we're very happy about that because we own the stock.
Yeah, exactly. And so one of the, getting into maybe base metals a bit, because we said we'd talk about them a little. One of them is zinc that's been really performed well for everybody, I think. And you mentioned that you have some exposure to Nevsun for the Bisha asset, which they just got the zinc circuit started. You was a gold mine originally, and some people miss that it's becoming a base metal story.
Well,
right?
I mean, it's a gold-rich volcanogenic massive sulfide system that started off as gold, and then it's moved down to high in copper, and now it's transitioning from the copper to the zinc zone. And so what people may be missing is that they finished the plant, it's up and running. I mean, it will be up and running, and they're commissioning it now. They've got to get over some working capital issues right now with respect to the circuit. But right now, once that zinc plant gets running, there's not too many zinc producers that are going to be coming on in this kind of market. And so if you want zinc exposure, I mean, that's one reason we held on to Nevsun, despite the fact that they bought Reservoir. You know, Brent sold a bit of Reservoir. I always held Nevsun, and I keep holding Nevsun.
And interesting, I mean, just from maybe more of a broad stance, I mean, zinc, over the last few years, we always hear zinc's going to be zinc, right? Zinc's our secret buy. It's going to go up. You know, you need $2 zinc. And now it is sort of solidly above $1, which is nice. I mean, that makes a lot more deposits economic than 75 cents. But from your point of view, are you looking for more exposure in zinc? Do you like it over the medium term, or is it just that you like Nevsun as a company?
I like Nevsun as a company, and the issue with zinc or with gold is that you can run ahead, whereas maybe people aren't pricing $1 zinc anymore. So you still want quality, and the question is, can you find quality? And then when you look at quality, we always look, our exit strategy always remains an M&A takeout. So is a deposit something somebody else would want? Because we're really not interested in the company that's holding an advanced exploration a project to actually build it, because then we have a change in management, then we have them looking at financing. We're asking these guys for a lot of skill sets that they may not have without a change in management. So we want these guys to basically do as much as they can do, and hopefully we pick the right deposit that can take it out.
And so that's a question of, like you said, looking at the team, and now you're looking, you mentioned more at exploration stage stuff. And you're going off the venture or off the Toronto Exchange too to do it. Is there any jurisdictions or anywhere, like people have been talking about, let's say Argentina because of the regime switch, or Ecuador because Lundine's down there? Are there any jurisdictions that are sort of popping in your guys' eyes right now, or is it? Well,
I mean, we talked about Argentina at the beginning of the year. I've got a lot of, my wife's from there, and I spent 7 years down in South America, most of it in Argentina. So yeah, I like Argentina, but I mean, we're not out of the woods there with respect to what's happening in Argentina. And that's another potential, example of people getting ahead of themselves. So, I mean, I was surprised with the acquisition of Lindero. That still strikes me as a very marginal deposit in a remote area that Fortuna took a chance on. Granted, it is permitted, but I don't see the return at this gold price for it. They might be holding it as an option, but that's fine. But we've got exposure on the exploration side with Mirasol, and we're, let's say, less worried about that exposure now that Argentina's a little bit more buoyant. We see Morro going ahead with Yamana. We see Cerro Negro doing well, and we see Vanguardia looking for more ore and doing the JV with Mirasol to find more.
And the government's saying all the right things.
Oh, absolutely. But I mean, and they're trying to do the right things, and the new debt holders in the future are seeing that. But still, they've got issues with inflation. They've got issues with debt. They've got issues with, they don't have very much working capital in terms of the current account balance. There's a lot of things they got to work out. And it's not over, and it's not like instantly been resolved, but it's on their path, I believe, to resolution.
Yeah, and so to wrap up here, Joe, I won't keep you from your lunch for too much longer here. One of the things we also touched on in Dawson that I'd like to return to, because you made a really good point, and this was during our At the Bar session. You said M&A will sort of be back when you see more cash contingent to transactions, and we haven't seen it yet even now.
Yeah.
And so looking for these things and being out there and doing the analysis, is there a sort of feeling that it might pick up going into next year, or what's sort of the...
Well, the thing is, I mean, if we stick with gold, let's stick with gold for now. The issue really becomes most of these gold companies now have taken big hits and write-downs, and not only from let's say, exuberant M&A, irrationally exuberant M&A, but also write-downs on their own reserves.
Yeah.
So what I made a point of at the Metal Investment Forum then in April or May that I went to was if you're looking at leveraged assets and looking to buy those with their leverage to gold, don't get the misconception that those will be taken out, because what I want to point out is a lot of these big companies have a lot of marginal ounces they could bring on with a $200 difference in their reserve price.
Suddenly it looks a lot different for them.
And they don't need to acquire them.
Yeah.
And they're already beside their assets.
Yeah,
they already know them.
Yeah. You hear them talk about their internal growth pipelines constantly and the optionality and all that stuff.
Exactly, right? And they've got it. So they're not going to acquire these assets.
Yeah.
So you've got to be satisfied with the fact that you're going to just get leverage.
Yeah.
That's all you're going to get, and just make sure that you're not the last one out the exit door.
Yeah, exactly.
When the liquidity dries out.
Yeah. And
so the question going forward is, what do these guys need? Growth is a question, because growth for growth's sake is no longer what's happening. Like does Kamanak's production profile really make a dent in Goldcorp's growth? No, it doesn't. But what it does introduce is a potential high internal rate of return project into their portfolio to show that they're doing smarter M&A.
Yeah, value accretive deals. Yeah, as they like to say in the press release.
And they did it, for shares, and Kamenak probably doesn't mind liquid. We didn't mind liquid Goldcorp shares to sell, which we sold.
Exactly, yeah.
But that's what people need to do. Yeah. And that's how you're not like right now, if we look at Pascua-Lama, what's happening in Pascua-Lama, we know that we had a $6 billion write-down back in 2013, and they spent whatever 300 odd million on trying to get it on care and maintenance, and now they brought in George B., who built Veladero and used to be a developer within Barrick, to come and look at a different way of getting a higher return out of that project by potentially going underground and lowering the footprint. So the footprint and the big project would have made a dent on Barrick's production profile, but a smaller project would make a bigger accretive dent.
Yeah, I see where that's really,
and I think if people are going there, which I'm hoping that they do, and it's really quality is what's going to be M&A. It'll be very suitor specific. But more potentially than just as much as the cash component is important, what we need to see is multiple bids.
Yeah. Oh, fair enough. Yeah, and that's one of the things you mentioned that can drive the cash. That's what will drive
because people have to up, and that's what happened with Reservoir.
Yeah, exactly.
Nevsun didn't want to spend more, but they were forced to.
Yeah, it was sort of a get the deal over the line type payment.
And it was barely. Even with that, they barely got it over the line.
Yeah. Well, Joe, I'd like to thank you again for joining us. This has been absolutely fantastic. This has been Joe Mazumdar from Exploration Insights, where he works along with his partner, Brent Cook. So please do hop by there.
Not at this coffee shop, though.
We're not at this coffee shop. No, we are. This is straight from the coffee shop. So please hop by the explorationinsights.com website. Subscribe. It's a great service. They're both specialists in their field. So, Joe, thanks again for joining us.
Great. Thank you very much for having me.
And we're back. And yeah, it's always fun to talk to Joe. We cover so much ground when we sit down and have a chat, because we go through and the way the topics spin off of other topics, and we get a lot of good content. So I'd like to thank Joe Mazumdar from Exploration Insights for sitting down with us again. It's always fun, and we do cover a wide range of stuff, and so it's always nice to get a little insight. I especially like that talking about gold majors and mergers and acquisitions, about how many latent ounces they have in the ground that either they wrote down, paid too much for in the last cycle, and some of these deposits are starting to peak their heads back up again and become more value accretive ounces, as we said during the interview. So it's always some good insights from Joe. So we'd like to thank him again. And I'd like to take this opportunity while we're giving out gracious thank yous to thank our sponsor, the Yukon Mining Alliance. Please do surf by and check out all the exciting activity that's going on in the Yukon. One thing I wanted to touch on this morning, which is pretty apropos, I'm actually writing up a site visit on Victoria Gold's Eagle project at the Dublin Gulch property, and they just released their updated feasibility study this morning, September 12th. So there is a conference call online if you want to surf by and check out comments from John McConnell and his team, president and CEO. And so just a quick rundown, annual gold production is now at 200,000 ounces for Dublin Gulch. That's based on proven and probable reserves of about 1.9 million ounces. I was like, oh, don't get that wrong. But OPEX of about US $539 per ounce, all in sustaining a $638 per ounce. So that's given them a post-tax MPV at 5% of about $508 million Canadian, and a post-tax IRR of 29.5%. So looking pretty good, especially assuming, remember, we're looking at $1,250 gold here, US $1,250 per ounce gold, and an exchange rate of 78 cents Canadian. So actually a little bit higher than it is today. I believe I mentioned at the onset we're at about 76 cents. So yeah, it looks it's always been an interesting looking project, especially since they are permitted. So this is essentially shovel ready. So it's interesting days for Victoria. So do surf by and check out their updated feasibility for the Eagle deposit. And interestingly, again, they also we mentioned last week just closed around a $29 million bought deal finance. So they're also cashing up a little bit. It's going to be interesting to see. One of the questions when I talked to John McConnell, president and CEO of Victoria, there, one of the questions I was talking about is the structure and the status of project financing, because that's pretty much where they are. Is the next big news is going to be if they can get that project financing locked down, assuming of course somebody doesn't buy them in the interim. But yeah, so that was our please do check by the Yukon Mining Alliance again and take a look at all the cool stuff going on in the Yukon. And the other thing, just to wrap up here, I want to touch on is we did last week talk about the Potash Corp Agrium thing, and they basically came out today and they were like, yeah, it's they unveiled the terms under which this proposed merger would go through. And it's a $36 billion, so like, big deal, all stock transaction. And it's interesting because there's no premium for either company in the deal, so it's essentially a true merger of equals, as they're saying, right? So zero, yeah, like we said, 0% premium. Potash Corp shareholders receive 0.4 of a new company share for each share they hold. Agrium shareholders receive 2.23 new company shares for each Agrium share. That gives pro forma ownership of 52% for Potash Corp and 48% for Agrium. And as we mentioned, they think they have about $500 million in cost synergies. Brad Wall, Premier of Saskatchewan, will be very happy because the new headquarters will be in Saskatchewan. Potash Corp's currently headquarters in Saskatoon, while as Agrium is headquartered in Calgary. So I'm sure they'll take the opportunity to take a little swipe at the NDP government in Alberta. Wow, we stole your big corporate HQ. But yeah, so that just came out this morning. There is a conference call on that as well. I'll be checking out. If you want detailed coverage of the Potash Corp Agrium situation, head over to our website, because I'll have an article coming out, I believe, late on Monday, so on the 12th. But yeah, so that's it was a action-packed show. So thanks again for joining us. I hope you did enjoy it. It's been Matthew Keevil. This is the Northern Miner Podcast, and we will talk to you next week.